very warm good afternoon, ladies and gentlemen. It's an absolute honor to have the kind presence of our eminent panelists and the lovely audience. As Winston Churchill said, success is not final, failure is not fatal. It is the courage to continue that counts. With these words in mind, I, Jasdeep Singh, on behalf of India Factoring, welcome you all to this amazing chat show, Factoring, a one stop solution for your global aspirations. On this show, we invite top dignitaries from the corporate world to have insightful discussions on various topics like factoring, technology, economics, etc. Before introducing you all to the eminent panel, let me tell a bit about India Factoring. India Factoring offers capital solutions through the factoring product aimed at converting your receivables into cash. The company is a subsidiary of European bank Fimbank plc, Malta, and is registered with the RBI as an NBFC factor. India Factoring is also 83 categorized authorized dealer. Through our global network, we offer one-stop solutions around receivables finance. Recently, India Factoring was awarded as the International Factoring Provider of the Year and was also the recipient of Best Deal of the Year 2022 award and is the market leader of export factoring in the India. Now, without any further ado, let me introduce you all to the eminent panel. First, we have Dr. Manoranjan Sharma. Dr. Manoranjan Sharma is the Chief Economist of Infomerics Ratings. He was earlier the Chief Economist, General Manager, and Chief Learning Officer of Canara Bank. His papers have repeatedly been globally accepted, viz. Global Finance Conference, Las Vegas, USA, Emerging Issues in Business and Technology, Western Illinois University, etc. He has been nominated member, Governors Advisory Council, Rajasthan, Chancellor's nominee on Senate, Rajasthan University, Jaipur, Chancellor's nominee on Board of Management, Kota University, to name a few. He has over 300 publications, including in the Business Review, Cambridge, US, Journal of Economy and Business, Bulgaria, occasional papers, RBI Mumbai, the India Banker, IBA Mumbai, etc. He received several distinctions, awards, honors, including IDSASR Research Award 2021 for outstanding research in economics development. We welcome you, sir.
Thank you very much. Thank you. Pleasure being with all of you.
Then we also have Abhijit Agane. Abhijit is the Senior Vice President, Relationship Head, West Region of India Factoring. He is a knowledge leader, MBA, CFA professional with over 20 years of banking experience, primarily in trade finance and forex. He has conducted guest lectures at premier management B schools like SP Jain Global School of Management. As a thought leader, he has presented at various industry associations and leadership summit events organized by World Trade Center, BSC, EEPC, TMA, TSSIA, IRMA, AIPMA, SME Chamber of India, Salesforce Management Summit, and India Leadership Summit. Welcome you, sir.
Yeah, thank you very much for this warm introduction. And it's indeed my pleasure on this chat show, Jasdeep.
Likewise, sir. Now, let me set this discussion in motion by introducing today's topics. Today, we'll be having discussion on the current economic scenario in the country. We'll have some insights about the Indian banking sector, also some things about the recent monetary policy, and last but not the least, also we'll talk about factoring. I would now like to request Dr. Manoranjan sir to take the helm of this show and begin with the first topic of discussion. So, sir, let's hear your views on, is declining rupee an opportunity or a challenge?
Well, thank you, Jasdeep, for your generous, kind words. The question you've posed is slightly difficult because in these times where digital disruption is the way of life, technological transformation, all of us are influenced by the software language, which, as all of us are aware, it's a binary language. It's either 1 or 0. But here, when you look at the changes, at the volatility in the rupee, there are mixed aspects. First, of course, we import a huge quantity of oil, what is technically called in the Reserve Bank of India language, in the language of the Government of India, as POL, petroleum, oil and lubricants. We import something like 85% of our crude oil requirements. Plus, we also import some of our crucial input for greater acceleration in the GDP growth, some kind of a structural transformation. So all those things will become costlier. But the other side is the exports become competitive, and to place matters in perspective, the rupee fall, the depreciation in the value of a rupee has evoked wide-ranging debates and discussions. But to place matters in perspective, I would like to submit that when you place things in a proper historical and comparative perspective, you will find that the rupee has depreciated this year by something on the order of about 8% or thereabouts. So when you compare it to emerging market economies, it's very much on the lower side. Going forward, I see that given the kind of uncertainties, scramble for safety, safe haven dollar is still considered to be a safe haven. I think gradual, calibrated fall within a small range is the way forward. And because of the high degree of volatility, which you saw in the rupee movements, the RBI has intervened, and RBI has maybe used about 50-60 billion dollars in the spot market. But the RBI has repeatedly made it clear that they are not here to look at any particular rupee value. What the RBI intention, and this has been a consistent stand across governors, across governments, that the RBI's intervention in the forex market is limited to reducing the volatility in the forex market. I'd just like to highlight one, because this rupee movement is closely related to the oil prices, the kind of there's a very interesting, slightly dated, I think 4 or 5 years back. As most of you are bright young students, you should be aware of the kind of work which is that. I think he was with JP Morgan earlier. Ruchi Sharma made a very interesting study. He's one of the globally acknowledged thought leaders in this area. And contrary to popular wisdom, it's commonly believed that the lower the price of oil, the better it is for India, because this has implications for trade deficit, implications for current account deficits, implications for fiscal deficit. But Ruchir Sharma demonstrated, and in a very powerful and telling manner, that the, if he has identified what he called the golden mean, and the golden mean for India, he places at when the oil trades at something like $50-$55 a barrel, because he said, and he substantiated this thesis, that if the oil prices fall below, the countries, large number of OPEC countries, other countries, send oil to India, and their capacity to get items, our export capability would get hit. So obviously there are issues with wide range of repercussions, ramifications, and we have to take a holistic view. On the whole, I think given the kind of heightened global uncertainties, the kind of strife that we find post the Russia-Ukraine war, there are so many other considerations. Most of parts of the world are still recovering from the COVID-19 pandemic, which is sometimes seen as once in a century kind of an event. So obviously, this rupee depreciation is well in line with our expectations. Thank you.
Right, sir. Thank you very much for the insights, sir. Abhijit, now I would like to take your insights on how do you think that this decline in rupee will impact factoring?
Yeah, sure. So I think a couple of points which I would like to highlight. One is
Yes.
the hawkish stance by Feds, rather the hawkish stance by most of the central banks over last few months. I think nowadays, I think 50 basis point hike or 75 basis point hike is not an exception. I think every Fed's meeting, or for that matter, other central banks meeting, I think we are witnessing all those very frequently, and that's a primary reason that dollar being the safe haven, it is getting strengthened day by day. The another major reason is what I see is a CAD, the current account deficit, basically. The FY23 forecast, what we are looking at is around about 3.7% of the GDP compared to 1.2% of the GDP in FY22, and that's a massive thing. I mean, so these are the primary reasons of why rupee is depreciating and why dollar is appreciating. However, having said this, if it happens, I think definitely short term the exports would remain competitive. And as you rightly mentioned that if, as Manmohanji rightly mentioned that if the exports are remaining would become competitive, it would always impact the requirement on of working capital for the exporters. And most of these exporters would definitely approach for unsecured lendings like factoring, because there will be demand for their products, and likewise they will go for incremental working capital solutions from a factoring institutions like India Factoring.
Okay, sir. Now, let us get on to the second topic of discussion here. So, India is likely to set an ambitious export target of around $800 billion for goods and services for the year 2022 to 23. Do you think, Manoranjan sir, that our macroeconomic conditions are right for a scenario like this?
Oh, well, thank you very much. It's an interesting question. If you look at India's export for the year which has just gone by, for the year ended March 2022, India had an export value of $335.44 billion. Now, from here, we are looking to end next March with a ambitious export target of $800 billion. So, prima facie, this may seem to be a huge aspect, but then things should never be seen in isolation, in some kind of a silo. And to place matters in perspective, I would like to submit that the kind of exports we recorded in the year ended FY22 of 335.44 billion marked a well over 46% increase over the last preceding year. So going forward, this is certainly a very ambitious target, but we do hope that we do believe that it's fully achievable, and there are justifiable reasons for it. Let me list a few reasons for you. One is, in case of India, the GDP growth is gaining traction. Most economies of the world seem to be doing well. In India, there has been a much sharper focus on basic issues of export promotion, such as competitiveness, pricing, quality, timeliness, diversification, addition. One more important factor, very important at the global level, which is sharply coming to focus, is the fact that China which was seen as some kind of a factory of the world, has taken a hit post their adventures in Taiwan, the COVID-19 pandemic, a vast political, economic reasons. So maybe it's a little ambitious, but India is trying slowly but surely to get into China's shoes, and maybe we could consolidate our position in the export markets in the Committee of Nations. Another factor which could drive is that there has been a significant trust on India's look east policy. So, taking into account all these forces and factors, while I would agree that this is quite an ambitious target, I certainly maintain that this is very much doable, and we have always displayed immense dynamism and resilience. I see no reason why this ambitious. This is something of a stretch, but it is certainly realizable. Thank you.
Very well explained, sir. Thank you, sir. And now, Abhijit sir, I would like India factoring being the market leader in export factoring area. So, how much role do you think factoring will play in to achieve this feat of $800 billion?
Absolutely. So I think so. First of all, $800 billion is indeed aspirational.
Right.
I'll just summarize my views on this. Uh, See, if you look at it, who are the largest trade partners for us? Like we have a good trade happening with US. We are having good trade happening with Euro. We are having good trade happening with UK. But if you look at it off late, the PMI number, composite PMI number for US, uh, which has come is 47.5, which is almost 25 months low. Okay. In Eurozone also the PMI is less than 50, 49.4, I believe so, which is also probably 17 months low. Okay. So that clearly suggests that it won't be that easy. Because the global markets, again, the geopolitical tensions are also,
Right.
evolving day by day. We have witnessed Russia's invasion in Ukraine. We are, some mock drill by China nearby Taiwan. So there are multiple factors. Okay, but at the same time, if you look at it, that one plus China strategy is, getting supported by most of the nations. That will give a huge impetus for India to as a manufacturing hub and the substitute for China, because already the anguish against China has already developed post COVID.
Right.
Even if you look at it, that the free trade agreements like with Dubai already taken place, with Australia already taken place. There are talks with free trade agreement with UK. There are talks with free trade agreement with EU zone. There are talks happening with uh, Canada, so Israel as well. So these are all positive things, and this would certainly would give India edge among all other developing economies. But having said this, the $800 billion worth of exports, merchandise exports, is definitely a Herculean task. As far as India factoring is concerned, of course, see, बोलने से 800 billion exports नहीं होगा. There has to be a innovative trade finance, and India factoring is offering all that innovative trade finance, which is without collateral. We don't insist for collateral. Without recourse kind of structure is also a need of the hour, which India factoring is giving, which is off balance sheet structure. So, of course, the orders would be available, but unless there is no working capital solution to ensure these orders are successfully executed, it's not going to be the possibility of achieving $800 billion. So, of course, India factoring will, as a market leader, will play immense role there, considering such kind of huge opportunities which are lying uh, down there as far as exports are concerned.
Right, sir. Now, Amar Moge has also commented that this is a great opportunity for exporters as they can hedge their future function incomes at higher forward premiums. So, right, sir. Now, coming on to the next topic. So, Manoranjan sir, you have been the chief economist of Canara Bank and are well versed with the banking scenario of the country. So, sir, how do you think that technology transformation looks like for the banks?
Well, thank you for a very interesting question. Digital transformation, digital disruption has been a way across economies, sectors, industries, and this has emerged. This term has been much used and abused, and this has been the new normal. But I am reminded of a very powerful words of William Shakespeare, who wrote in the play Merchant of Venice that mercy is twice blessed. It benefits both the giver and the receiver. So when we apply this Shakespearean concept of digital disruption, digital transformation to the banking system in India, we find that the banking system is basically three major channels, three major stakeholders: customers, employees, and the bank. We find that it benefits all the three segments. For example, just let me take a minute to explain. In case of customers, the footfall goes down, the number of customers visiting the branch, physical number goes down. So employees can do their work in a more kind of a congenial, conducive environment. Uh, when you look at the customers of the bank, obviously you can have your transactions 24 by 7 by 365. You have the hassle, you don't have the hassle of visiting branches. You can do it at any time of the day or night, whenever it suits you, through internet banking, mobile banking. So it is of great use, help to the customers. In case of the banking sector, banks themselves, it is greatly beneficial because it significantly cuts down, slashes the cost. Let me highlight one of a very important study carried out by a pioneering institution in the country called NIBM, National Institute of Bank. This is slightly dated. This was done about, I think, 10, 12 years. But the basic conclusions, the policy prescriptive implications of the study had not changed. And what this study demonstrated, that if a customer visits the branch and withdraw, let us say, does a transaction, withdraws money either through a slip or a check, it costs the bank 45 to 50 rupees for a single transaction. When the customer moves to the mobile banking platform, that same transaction costs the bank something like 9 rupees, because the revenues have to be shared between the mobile vendor and the banking system. But when if the bank is able to shift those customers to the internet banking platform, it costs the bank only 3 rupees on an average for a transaction. Now, these 3 rupees, 45 rupees, 9 rupees in isolation may seem to be a small sum to you. But given the fact that we have millions and billions, crores of transactions at the end of the year, this adds to a very tidy sum and can significantly, and does significantly, transforms both the bottom lines and the top lines of the banks. So this kind of technological transformation of the Indian banking system, which you are seeing today, has significant implications for outreach, scale, cost, and revenues. And going ahead, in conformity with the winds of change sweeping all over the world, I am confident that banks will become even more tech savvy and adapt with the changing needs and requirements. Thank you.
Very well said, sir. And also, sir, Governor Das has recently said that India banks they cannot perennially rely on RBI money to support credit offtake. What are your views regarding this?
Well, the governor has made a right statement. I think if we look at the for last quite some time, we have been in a higher rising interest rate scenario. If you look at the last 3 4 months, we had a 40 basis hike in the repo rate. In the off cycle move, no policy was scheduled in May, followed by a 50 basis hike in June. Again, a 50 basis hike in. So current there's a repo rate there is 5.5, reverse repo is 3.35. So obviously, this will have some kind of a restraining influence on the credit system. But then, what I would like to submit is that uh, there are multiple issues. When banks do lending, they have to look at the profitability of the firms, the industries, the overall credit scenario, and the basic function of banks, whether you look at the actual theoretical position as enshrined in the Banking Regulation Act, or the functions and working of banks. If you look at the asset side of any balance sheet of any banks, the two most prominent items are loans and advances, and the investment. As I've been saying repeatedly, if you look at the Banking Regulation Act, it defines the banking system as an entity which accepts deposit for the purpose of lending. So, as I been saying for quite some time, this loans and advances is the bread and butter of the banking system, and the treasury operations, investment operations, provide something like the icing on the cake. So going forward, there are also multiple issues of I think due diligence, of NPAs, of credit growth, fear of 4Cs such as courts, CBI, CIC, CVC, and all those, so that which hamper a genuine credit decision by the bankers. So all these things need to be considered holistically. But going forward, I think trade growth is again gaining traction, and this is good for the Indian economy. We need robust growth across segments, across agriculture, MSMEs, retail lending, corporate book. All these are the basically four segments of the loan book of banking system in India, and all these four segments have to grow in a robust and sustained manner for the Indian economy to achieve its avowed goals of development and transformation. Thank you.
Right, sir. Very well said, sir. Now, let's discuss about RBI governor's statement. He recently said that India will become the fastest growing economy in the financial year of 2023. Now, do you guys think that this is an achievable feat? Abhijit, let's hear your views on that.
Yeah, so I don't see any reason why we can't be one of those fastest growing economies. Undoubtedly, one of the fastest growing major economies, rather. If I look at it, China, they are following the zero COVID policy, and
Yes.
which is actually kind of boomerang, or rather, it's backfiring their overall plans. There is always a one plus China strategy people are talking about, and anguish is already developed against China. Uh, if you look at it, EU zone, we already discussed their PMI numbers are less than 50. We already talked about the PMI numbers for US is also less than 50. So overall, I think what RBI is forecasting is around about 7% GDP growth, which is very much possible. Keeping in mind, India is poised for a big, sustainable growth, especially when this geopolitical events actually giving a natural edge for India, and I believe that because of which multiple things are happening. Like we discuss about the free trade agreement with countries like Australia, Dubai already taken place, and of course the there are talks for free trade agreement with Europe, and there are talks for UK as well as Canada, Israel. So that clearly suggests that 7% is definitely achievable. But of course, there would be a there. I'm not saying it would be a cakewalk, because the IMF has also clearly revised world GDP forecast for 2022. They are talking about now, they slashed it by 40 bps, which is they are talking about 3.2%. So keeping in mind, the 7% is definitely achievable, but at the same time there would be challenges which India needs to overcome.
Let's hope that we get over those challenges and become the fastest growing economy in the year 2023.
Absolutely.
Now, Manoranjan, right, sir? Now,
Uh,
Dr. Manoranjan, sir, what are your views?
Well, I certainly agree with Vijit that I think this is very much achievable. And what I would like to supplement him by that the RBI governance assessment is not a flash in the pan. It would enjoy a fair measure of consensus across the development spectrum. For example, if we look at the IMF's prestigious publication called WEO, World Economic Outlook, they publish it at the start of the year every quarter. So even the latest quarterly projections, which came out recently, even though they have paired the India projections, still they are projecting India to grow by something like 7.4. So I think whether you look at IMF, whether you look at OECD, World Bank, all these important multilateral institutions, individuals, all of them seem to can bring that high growth in India, something in the region of 7% or more, is here to stay. I would also like to draw attention to the fact that obviously these things took a back hit in last 2 3 years, because of the devastating, crippling impact of COVID-19. But then I would like to draw attention to a very powerful study done in I think October 2003 by Goldman Sachs. This study was conducted by two persons, Dominic Wilson and an Indian lady called Rupa Purushottam. Traditionally, high population, as in the case of India, is considered to be some kind of a drag on the process of economic growth and structural transformation. Now, these people, for the first time, demonstrated quite powerfully that because of what they identified as the demographic dividend, India had a very young population, and this situation is likely to persist something till 2040, 2050. By a young and a growing population, they meant in the reproductive age group. You are likely to work in the age group of, let us say, 20, 22 to the age of 60 or so. So this kind of a thing, they have highlighted that this places India in a very distinctive advantageous position, and this kind of situation is likely to persist till 2040. In fact, they projected that by 2040, 2045, India could emerge as the largest global economy in the world. But here I would like to sound a note of a dissonance, a discordant note in that, which was highlighted briefly in that so-called report of the BRICS is representative of it means Brazil, Russia, India, China, South Africa. These are the major players going forward on the globe. But they have highlighted some areas of concern also. Sometimes we as Indians have a tendency to take shortcuts, gloss over the difficulties, as Abhijit also and Mr. Angne mentioned that we should not gloss over, we should not underestimate. And they have identified some challenges which are very true in the case of India, of considerable contextual significance, the challenges of health, education, and employment. As I've been saying, and I've been publishing papers also, that unless these things are addressed, maybe India's demographic dividend could well turn into a demographic disaster. So these things require some kind of a renewed trust. And if we are able to do it, I am confident that India will acquire even more size and muscle in the global committee of nations. Thank you.
Very well put, sir. Thank you very much for that, sir. Now, Manoranjan sir, you are an accomplished chief economist and you're a globally acclaimed scholar. Now, sir, what do you think that the recent changes in monetary policy, a hike of 50 BPS, how effective do you think it will be in impacting inflation?
Well, inflation, you see, in India, there are several ways of looking at inflation. There are six commonly accepted benchmarks of inflation. But the two measures which have the most significance, so in any kind of debates, discussion, they are the WPI and the CPI numbers, wholesale price index and the consumer price index. So obviously, these two things have. But if you look at the latest position, uh, for the June numbers, the WPI numbers were very high, something like 15%, and the CPI numbers have been consistently breaching the 6% mark. As some of you would be able to recall, about 10 years back, the RBI shifted from WPI to CPI and also instituted the formation of a committee called the MPC, in which there are three members from the RBI, three from outsiders, experts, and this MPC was given a specific mandate to manage inflation at 4% plus minus 2%. So in fact, the band becomes 2 to 6%. But if you look at the latest inflation numbers, CPI for June, obviously it exceeded the 6%. It came in at 7.01, and consistently from January 22, it has been exceeding, it has been breaching the 6% threshold. If you look at the median rate of inflation as defined in terms of the CPI as an MPC mandate, the Indian position has been that we have been breaching this median rate of 4% for 32 months at a stretch. So obviously, these are difficult times. These are times of great challenge. Towards this end, the government of India effected some major changes. I think it was late May or early June when they slashed the petroleum prices, subsidized gas cylinders, and all those measures which had an impact of something like 1 lakh crore on the national exchequer. But these measures also had a limited impact of about 60 basis points on the inflation rate. We did some rough rule of thumb back of envelope calculation, and we found that this had the potential to reduce the inflation rate by about 60 basis points. Going forward, we do foresee that high inflation is here to stay for some more time, and therefore, going ahead, a constant monitoring of the evolving growth inflation trade off of the inflationary spiral in the Indian economy needs to be carefully monitored and mid course corrections taken as and when necessary. Thank you.
Right, sir. Sir, the situation in India have been well explained by you. Now, also, we have seen that in USA, the economic conditions are not that great. After the burst of the US housing bubble in the year 2008, the USA is again experiencing recession-like scenarios. Now, how do you think that it will have an impact on our economy, being a close aid of USA?
Well, first of all, let me start with some basic concepts. I'd like to clear a misconception. As students of economics, finance, management, all of us should be aware of the basic distinction between recession, slowdown, and deceleration. Sometimes there's a tendency to use all these terms synonymously, but recession is technically defined when you have two successive quarters of contraction, of a shrinkage, not just a slowdown in GDP. So going forward, obviously, year 2021 was very bad. in the first quarter, Q1, we had a GDP contraction of the level of about 24%, 23.9 to be exact, followed by a second quarter contraction of 7.5%. Going forward, Q3 and Q4 registered some growth, but still, because of the massive contraction caused, we still ended the financial year 2021 with some kind of a contraction, some kind of a negative growth. But as things stand, we do not foresee. Obviously, there is a measure of a tightening going across all central banks. The US is grappling with a 40-year high rate of inflation. Similarly, the UK, and both these countries, there is a significant discernible slowdown. Some stagflationary concerns. That means a combination of stagnation plus inflation have also come to the beam. But going forward, we do not see any possibility of recessionary trends emerging in the Indian economy. We do think that something growth of something like 7 to 8% is here to stay, at least for the next few years. Thank you.
Gotcha. Now, there's a question from Vinod Chaubey, sir, and this question is to Dr. Sharma, that data security has been a great concern for global economies. In India, we have introduced a bill in Parliament and have withdrawn the same due to many shortcomings that have been observed in that bill. It's slated to be reintroduced in a better form. Are we not way behind in having a strong data security or protection bill? With such important legislation not in place in India, does this affect India's position in global market in securing and protecting the data?
Well, this issue has become quite a common for discussion in all parts of the world, particularly in India, and this has acquired a sharper focus because of the recent changes that you mentioned, which have happened in India. But while digital data is gaining in significance, there are issues of phishing, there are issues of security, there are issues of privacy, which have increasingly come to the fore. And all these issues need to be considered properly. While the data will go in the public domain, issues of phishing, issues of security, issues of privacy also need. So we have to straddle these seemingly conflicting. At times, some people may even say contradictory trends and tendencies, and arrive at some kind of a happy reconciliation of these conflicting aims. One, data has to go digital, but data has to go digital without being oblivious to the concerns of data privacy, without being oblivious to the concerns of phishing, data misuse, and all those things. So this is an evolving area. These are early days. All of us are grappling with the situation. I'm sure all stakeholders are coming together and will work out what is the best way forward, the pathway to the future. Thank you.
Now, let us talk about the classic golden question, without which a discussion on economics and finance cannot go. Do both of the panel members feel that India will become a $5 trillion economy? And Abhijit, also adding on to it, I would like to hear your views on whether how much of a role will factoring play into achieving this target?
Sure. So first of all, I have no doubt that whether India will become $5 trillion economy or not. However, the question should be when it would become this $5 trillion economy. Okay, we are already witnessing a growth of 7%. So if you're thinking of achieving this growth, maybe say FY25-26. Okay, so the growth, what we are say to be very precise, the growth what we should achieve is more than 8%, 8.5% consistently. Okay, right. Which is going to be a Herculean task. If I look at it, the current economy of $3 trillion, 40% is trade. So around about 1.2 trillion is a trade. If you look at it, China currently economy size of $14 trillion, the trade contribution is around about 60%. Okay, who are the major contributors for this GDP in China? SMEs, contributing almost 65% of the overall GDP. In India, is around about 35 to 40%. if we need to become this $5 trillion economy, first of all, this SME contribution of 35-40% should go to at least not less than 50-55% in line with uh, China or But where are we standing today? I mean, बोलने के लिए 5 trillion इकोनॉमी तो बिल्कुल बन सकते हैं, बट कैसे बनेंगे हम लोग? At the same time, the best part is that in this first 6 months, in this difficult time horizon, rather keeping in mind the current geopolitical tensions and all those, India witnessed a FDI of almost $37 billion, which is one of the highest post 1991. So, which means people are willing to invest, but are we ready for this? Offering them a working capital solution? The answer is no. I was recently a part of World Trade Center on the panel of World Trade Center, and I understand that 4 crore SMEs and the shortfall of working capital is almost 1 lakh crore. If you today look at it, the irony is whenever any SME go for any bank for finance, the first thing which they ask is the collateral. 99% finance of the Indian economy currently is happening against the collateral. There is a need of an innovative trade finance like what India Factoring is offering, which is without collateral. There is an innovative trade finances like factoring solution, which is without recourse of balance sheet, so which will ensure that there is a deleveraging of balance sheet. And this will enable, because the end of the day, the finance is the backbone. Unless you will not provide that kind of support, financial support, how would this SME will grow, and how would this contribution of 35-40% will become 50-55% in line with our competitors? So there is a possibility of $5 trillion economy for sure. Keeping in mind, a lot of FTAs are happening. There is a scope of, huge opportunities in terms of in terms of FTAs, like with countries like Australia, Dubai, what we discussed, Canada as well, and UK as well. But the irony is, I think it's a high time now that people should look at the innovative trade finance. Once we provide that kind of innovative trade finance solutions, like export factoring, what India Factoring is providing, I think this dream will definitely come true. And I don't see any reason that why India cannot achieve this 5 trillion economy mark, keeping in mind a lot of talks going on as far as one plus China strategy and anguish against China. So way to go. But at the same time, I think the need of the hour is there has to be an innovative trade finance. This is what I believe.
Right. Dr. Sharma, what are your views? When do you think we'll be able to achieve this feat of
Yes, I
$5 trillion?
would broadly say there are some differences in terms of nuances. I would just perhaps strike a more optimistic note. Let me say by that if you look at the March 2022 figures, the Indian economy in terms of US dollar terms was at 3.3 trillion economy. So going forward, our calculations, rough calculations show that by 2026-27 for the financial year ended March 27, India should be a 5 trillion economy. And going forward by 2033-34, India could even be a $10 trillion economy. Now, all this presupposes a nominal growth of about 10%, very much achievable, 6 to 7% growth in real terms, 3 to 4% inflation. If we look at, let me try to substantiate my thesis with the kind of development indicators which are emerging. First, let me refer to the robust tax collection, both in terms of direct taxes and indirect taxes. If we look at the tax collection for the indirect tax collection, GST collections for the month of July, which came recently, is that we had a tax collection of about 1,40,000 crore, slightly in excess of that. In April, the tax collections for March were at a mind-boggling figure, huge all-time record of 1,80,000 crore. So going forward consistently for last 6-7 months, we have been able to achieve an indirect tax collection of something like 1,40,000 crore. Going forward for the year ended March 23, 2022-23, we see that we are almost on track to achieve 18 lakh crore of this GST collections. Similarly, the direct tax collections in India have been on a roll. Last year, we recorded an all-time high of 14 lakh crores. Similarly, there has been higher corporate bond issuance. If you look at the capital markets in the last 6 months, obviously there have been some ups and downs. Sometimes there's some volatility. But broadly, if you look at the BSE Sensex, it has been in a region of about 60,000 points or so. There have also been rising FPI's fund portfolio investments in terms of debt equity. They are rising again. Core sector output is even more than the pre-pandemic level, and India continues to enjoy a robust and healthy foreign exchange reserves, which are consistently at a level of about $650 billion till about, let us say, 3 months back. Obviously, because of the steep fall, the RBI has pumped in some money in the spot market. We have maybe lesser by about $60 billion, but still, we may have a foreign exchange of something around 475, $480 billion. Now, going forward, this also places in a strong advantage. Going forward, as I see, some of the important growth triggers would be to achieve sustained GDP growth of about 8%. Investment rate has to rise from the current level of 29 to 36%. And as the Mr. Agne and we have been, exports have to play increasingly important role. And towards this end, the kind of ambitious export target of 800 billion for the next year, if we are able to scale those kind of ambitious stretched pieces, I'm sure we'll be well on the course to achieve these ambitious but certainly doable targets. With this note of conscious, let me end that. Yes, this is a difficult target. This is quite ambitious, but I'm certainly think that this is certainly doable. Thank you.
Right, sir. Thank you, sir. Now, Abhijit, what role do you think factoring will play to get to this $5 trillion target? And primarily, how much will India factoring also to contribute to this?
Yeah, absolutely. So I think as Manoranjan ji has quietly communicated that exports would play a
Yes.
very important role to ensure this becomes a $5 trillion, and of course the ambitious target of $800 billion worth of exports, merchandise exports. What people are talking about, and I fully agree with him. I think there is a scope. I think what he has communicated that GST collections of all time high, what we witnessed in the month of April, and again consistently last month also we witnessed more than 1,40,000 crore. So it's a kind of red carpet kind of situation. But having said this, we have to take this opportunity with folded hands. And as far as India factoring is concerned in this particular exports growth kind of scenario, because we offer unsecured facility, we don't insist for any kind of collateral. We offer innovative trade finance solutions like export without recourse factoring, which ensures that this lending is off balance sheet lending. Even if buyer don't pay, we don't go back to the seller, we go back to the insurer. Only such kind of facilities are need of the heart for a developing economies like India. Because if you look at it, factoring in a regions like Europe, it's at a far bigger stage than what we are talking about. So $800 billion exports, $5 trillion economy, but at the same time we need a solutions like structured trade finance, innovative trade finance, unsecured solutions like factoring without recourse, off balance sheet structures, and that is where India factoring will surely play a role, being a market leader. And I don't have uh, you know any apprehensions that that where we are standing right now, and in and the future is such kind of bright future for all of us. I'm sure India factoring will play major role way forward as well, and consistently as well.
That's absolutely true. Now, let's end the discussion with the final question and sort of an advice. What advice do both the panel members have for the upcoming exporters and businesses?
Yeah, so I'll just chip in. So first of all, every exporter should look at the there is opportunity, because moment you talk about FTA, it's going to be a game changer. We never witnessed such kind of FTA kind of scenarios before 1991 or post over last 2 decades as well. This is the first time. Of course, we are having anybody can talk about ASEAN and all this, but opportunity was not that big. But now we are talking about FTA with Australia, FTA with Dubai and UK, EU also, Israel also. Canada also. So every exporter should look at that, the bilateral trade opportunities between these countries, how this will impact their business, and how this will bring that kind of, hidden opportunity for these exporters. And at the same time, of course, if even if they get an order for that matter, how they can arrange that finance. Of course, India factoring is one key partner to ensure even if there is no collateral, uh, and basis the order, uh, what we are having it, India factoring can definitely play a role as a export without factoring kind of services. So net I think the 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 most important aspect is that one should identify these opportunities well in advance and accordingly plan in that direction. So this is what I would like to comment at this juncture.
Right. No, Manoranjan sir, what are your advice? What is your advice for the exporters and businesses?
Well, I would agree with Mr. Agne. I'd just like to supplement that one important ingredient of in the last few years of the government of India's policy in case of exports, in case has what has been characterized as look east policy. So look east policy is also likely to pay some dividend. There has been a greater attention or reducing the concentration of exports to a particular group of countries, particular. So this kind of diversification, this kind of a thrust on value addition, moving up the value chain, there's much importance across the boards, so that we have to be competitive, not in just in products at the lower end of the spectrum, but in high value added items which have a significant element of value addition, finished products. And if we are able to reduce the concentration, diversify our export basket across countries, across commodities, in conjunction with the look east policy, I'm sure good days are ahead and we are likely to do much better in the future. Thank you.
Right, sir. Very well put, sir. Now, I think due to paucity of time, we should end the discussion here. I would like to thank the eminent panelists for such an insightful discussion. I'm sure that all the audiences gain many valuable insights from this. Thank you very much to both the panelists, and also to all the people whose questions could not be covered. You could feel free to connect with us on LinkedIn at India Factoring, and we'd love to answer those questions. So thank you very
Th-
much to Dr. Manoranjan sir and Dr. Abhijit sir and Mr. Abhijit sir. It was indeed an honor to have both of you.
Thanks, Justy. Thank you, Manoranjan. Thank you. My pleasure.
Thank you very much, Jasdeep. Always a pleasure and a privilege being with all of you. Thank you very much.
Thank you, sir. Thank you very
Thanks.
much.